Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Ronnie Moas of StandpointResearch.com and now philanthropyandphilosophy.com. Ronnie, welcome in person to the Keiser Report.
Thank you for having me.
All right, this is a fantastic opportunity for us. We have a lot to talk about. The first thing I want to mention, though, is as a stock analyst, you've been shooting the lights out. Since 2008, you've had over 400 stock picks, and they're beating the S&P by 500 basis points, and you're beating your peer group in many cases by 20%. So you are a gifted stock picker, and you're absolutely number one as a stock picker, and as a result, you are enabling lots of money to be made. But now you're taking it. You're trying to change gears, or you want to do something with that money. You've got to. What exactly? How do we describe this? Because you're a gifted stock picker. Usually that's enough, but in your case, there's got to be something more. Talk about it.
Yeah. Well, what happened is there was such a focus on Wall Street on how much money these companies are making, and nobody ever asked how they were making the money. And in the last year, I started really analyzing what these companies actually do to turn a profit, and I just got sick to my stomach. I blacklisted Apple and Amazon and Starbucks and Walmart and Yahoo and Philip Morris and CVS, and each story was more nauseating than the next one. And I've been in more than 50 countries on 6 different continents. This is my last stop right now on a 50,000 kilometer trip that I did during the last 4 weeks, 8 different countries. And a lot of what I see in America, I do not see in other countries that I'm traveling to. You can blacklist the mining companies, you can blacklist the consumer staples companies, you can blacklist the consumer discretionary companies. I'm really having trouble right now finding a company and an industry that is clean.
Okay, you have clients, money, people, pension funds, etc. They're buying your research, and they manage money. And so, what's been the response of the client base?
I think they're a little bit uneasy. Nobody on Wall Street has ever spoken the way I'm speaking. I am hell-bent on cutting the gap between rich and poor worldwide. And I'm using a different approach. Speaking nicely to the people at the top has gotten the poor and those speaking on their behalf absolutely nowhere for centuries. And I'm deciding to take a different approach, which is humiliating the upper class, telling them exactly what I think about them, and educating the public as to what is really going on right now. You take Starbucks, for example, the market cap is $55 billion. Most of that money is in the pockets of wealthy multimillionaire and billionaire shareholders, $55 billion. And the bean pickers in the coffee fields are getting $4 a day. The situation with Amazon, Walmart, Apple is just as bad, if not worse. I don't even want to go into what Philip Morris is doing in order to turn their profit every quarter.
Okay, now this is what you're talking about. It's not, obviously it's not new. There's a whole movement called corporate social responsibility that's been out and about for many years, and it's growing in importance, and there are funds dedicated to corporate social responsibility. And then you always hear the riposte that, Milton Friedman said that the only responsibility for a company is to make money. It's not to be quote unquote good. And there's the dynamic. So how are you different than, let's say, a corporate social responsibility effort?
First of all, I don't really look that closely at what other socially responsible organizations are doing. I'm doing my own thing. As far as Milton Friedman goes, I've heard all of the arguments from the right, and none of them make sense to me. This trickle-down theory and the free markets theory, I think it's just a lot of hogwash and excuses on how they can justify what they have, and there is no way to justify what they have. From what I've seen in my travels around the world, the people working the hardest and adding the most value to society are the ones living below the poverty line. And we just have the whole pay scale here twisted, and it needs to be adjusted. I'm not a communist, I'm not a socialist, but I think that the pie is not being split up fairly. When we take from the poor and give to the rich, that's fine with the upper class. The minute I talk about having a more fair distribution, I'm a communist and a Marxist. I just want people to be treated fairly. Nobody working 40 hours a week should be anywhere near a poverty line, and I don't care what country they're living in. We could wipe out poverty very, very easily, not just in the United States, but in the other Western countries and around the world, if people would just spend money on what they need, be a little bit more philanthropic, and just have red lines in the sand that they're drawing with regards to what level they're willing to stoop to in order to turn an extra dollar of profit for shareholders that in many cases don't even need the extra money.
Let's talk about this in terms of being purely on a stock picking side, because this is how you approach this. You're looking at it as an analyst, and obviously the best analyst on Wall Street right now. You're number one if you look at your track record since 2008. You are, again, to use an oft-used phrase, shooting the lights out on the analytical side of the business. When you talk about a Starbucks or you talk about a cigarette company, I mean, the term that an analyst uses is risk. These companies are, you're identifying risks to society, potentially risks to these companies, to their balance sheets. So that risk has a dollar of value to it, doesn't it? So doesn't your report, if you come out with a report on Starbucks, stock's 52 billion market cap, and I don't know what the stock price is currently, but what you're saying is that there is X dollars per share of unrealized social dissent risk. Is that correct?
Yes, the problem is it's going to take many years before that is realized. In other words, if you want to short these companies because there might be some social backlash now that we have, up until 20, 30 years ago, the poor people had no voice. Now they have a voice. And it's through people like myself and through their own personal use of the internet. And, in theory, you could say, okay, I'm going to short these companies because I think eventually the public is going to turn against them.
Well, you know where I'm heading with this.
Yeah.
Because we've talked about it a little bit. We've on this show, we've talked about this for a number of years, and I've had a campaign here in the UK with both Zach Goldsmith and Ben Goldsmith about monetizing the dissent and getting people involved. In other words, if Starbucks is this company that has this unrealized social dissent on its books, can't the public, by simply pointing that out, and you do mention boycotts as well on your website, if they were to boycott a Starbucks with the goal of knocking X number of revenues off the top line, and therefore the stock price would get hit.
Right.
So isn't that a good way to marry the social networking that you just talked about, people are now aware of what's going on, with your work as an analyst, and then capturing that, let's say, to take it a step further, capturing that realized dissent risk with a short sale. So is that not a good idea? I mean, but my question is, can't you get the public involved and involved in a way that they're not putting up any money? They're putting up a boycott, which is a free, a riskless and cheap way and no-cost way to fight back.
I will spend the rest of my life driving traffic to this new website in the hopes I can get people to start being more discriminating in who they spend their money with. The problem is I can't get my message to the masses so easily because the large networks in America, if it's ABC, CBS, NBC, will not let me speak the way I'm speaking to you because I'm attacking their corporate sponsors that are paying for the advertising time on their network.
Okay, let me jump in here with my response to what you've just said, because as I've just said, we've been active trying to push a campaign like this for years. And when I went to the hedge fund community, they said, great, show us a short sale because you're going to deliver some top-line revenue depletion with a huge boycott. Maybe it's Coca-Cola, maybe it's Starbucks. But when I went to the activists, like Greenpeace and others, they said, we don't want anything to do with this because if we associate ourselves with Wall Street in any way, and with finance in any way, the average donator, the $5 that we rely on, will be turned off, and it'll kill our fundraising efforts.
Even if they go against Wall Street.
If they mention that they're using some kind of hedge fund or short sale to attack a company that's doing wrong, the perception from their supporters would be that they've somehow flipped sides and joined the bad guy. So how do you fight that illiteracy, financial illiteracy?
Well, you mentioned in my previous interview with you, maybe there's a way to get around that by saying that the money you make in the hedge fund will go to the people that are being undervalued, underappreciated, and underpaid by society.
Exactly. So if, let's say, who's the biggest victim? Okay, Starbucks, you've got victims in the third world who don't get the the benefit of the trademark on those coffee beans, and the other aspects, the intellectual property of the coffee beans. They don't get they're not selling the finished product of the coffee beans. They're getting hugely undervalued for their coffee beans. So let's say there's a group in that area, maybe it's Brazil or somewhere else, and this fund, if you marry the boycott with a short sale, and the idea is if you capture a gain, we're going to channel it to that group. Isn't that using capitalism in a way that, in a Wall Street friendly way, to reverse the flow of abuse?
It would be unbelievable, but the people that are giving you the money to run the hedge fund are going to have to forfeit profits. So
not necessarily, because they're making money on the short sale, and it's a competitive trade. In other words, they are now introducing this type of arrangement, a trade that is non-correlating with anything else.
So you wouldn't be giving all the profits to the people that are being undervalued that we're talking about. You would be splitting it up between them and the people that put the money into the hedge fund. It's a fantastic idea, but we need to get this out to the masses, and that's what I'm working on now.
You've got the chops on Wall Street. You're the stock picker extraordinaire. You're not just some guy who has a mild interest in stocks. You are the Babe Ruth of stock pickers, at the moment. I mean, that changes every decade. There's someone rises up and is like, God, this guy has got the hottest hand in the world, and you are that guy. So, again, I should, drop these names. Ben Goldsmith, Zach Goldsmith. These are children of billionaire Jimmy Goldsmith, who made his bones on Wall Street doing this type of thing. So putting this all together, it could potentially create this, what we call it, the Karma Bank hedge fund, and channeling money, grabbing those short sales, splitting it with the investors, and as you point, would something like that, your site, Philanthropy and Philosophy, does it fit in with the ethos of that?
Absolutely. What I'm trying to do is, I'm still in the stock market because I love what I do. I love the competition and being able to outsmart and outperform all of these firms that rejected my resume 20 years ago. And what I'm doing is, with the money that I'm helping people make with Standpoint Research, I'm telling them where I would like to see some of that money go. And that's why on the new website, philanthropyandphilosophy.com, I'm giving them the names of 24 of the most highly regarded, highly efficient, highly transparent, and honest charities in the world. And you have all the options there, whether it's animal shelters to cancer research, education, hunger in Africa, and everything in between.
But admittedly, that's a bit of a passive approach, because you're suggesting that they make that donation, as opposed to tapping into those animal spirits and saying, grab these short sales. But kind of out of time, actually, but can you stay for another segment?
Absolutely.
Okay, that's great. So stay for another segment, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Ronnie Moas of philanthropyandphilosophy.com. If you'd like to get in touch, tweet us at KeiserReport. Until next time, bye, y'all.